Anjali. I'm studying in final year BCom, Government First Grade College, Arts, Science and Commerce, Sira. Subject name is Investment Management, taught by Tirumala. My topic name is Fundamental Analysis of Cipla Limited. Economic Analysis of Cipla Limited. Growth in healthcare spending. Increasing healthcare expenditure in India and other countries increase the demand for medicines which benefit Cipla. Exchange rate impact. Cipla export medicines to many countries. Change in currency exchange rates affect its revenue and profits. Government policies. Government regulations and pricing control on medicines influence the profitability of pharmaceutical companies. Industry analysis of Cipla Limited. Third largest term or volume and 13 largest in term value. Branded generic constitute 70 or 80% of market. Highly fermented, estimated to grow at 20% CAGR over next 5 years. FDI up to 100% under the automatic route for manufacturing of medical service subject to specified conditions. The Government of India plans to set up a $640 million venture capital fund to boost drug discovery and strengthen pharma infrastructure. Company analysis of Cipla Limited. Strong product portfolio. Cipla produce medicines for respiratory disease, HIV, cancers and heart-related illnesses. Global presence. The company operates in more than 80 countries with strong market in India, Africa and the United States. Reputation for affordable medicines. Cipla is known for providing high quality medicines at affordable price. Financial statements of Cipla Limited. Income statement, balance sheet statements, cash flow. Income statements of Cipla Limited in 2024-25. Balance sheet statements in Cipla Limited 2024 and 25 percentage change. Cash flow statements. Key financial ratio of Cipla Limited: profitability ratio, valuation ratio, liquidity ratio in 2023 and 24 and 2024 to 25 financial year percentages. Business model of Cipla Limited. Cipla focus on generic medicines, active pharmaceutical ingredients, respiratory therapies, consumer health products. Competitive advantages of Cipla Limited: low cost, reverse engineering of new process of the mass productions, high quality drugs at low cost due to the absence of product patent, new pharmaceutical products to the market cost $1.2 billion. Cipla simple reverse engineered the process. Low cost business model, relative cheap labor and high skilled manpower in India. Produce drugs much cheaper than those produced by the patent owners. Management quality of Cipla. Quality management system. Cipla uses comprehensive QMS to monitor critical key performance indicators in manufacturing, supported by IT software for quality control. Strategic focus. Management is focused on expanding respiratory, oncology, and especially drugs profiles, with 22 brands achieving over rupees 100 crores in sales in the Indian pharma market. Risk management. Strong oversight of supply and quality ensure continuity and compliance through the company. Notice potential risk from AI enabled threats to IT systems. Regulatory compliance. The company adheres to strength global standards with manufacturing units often audited by WHO and other regulatory bodies. Corporate governance of Cipla Limited. Board and management changes. As of January 2026, Achin Gupta is the Managing Director and Global Chief Executive Officer. Designated. The brand underwent changes with the retirement of directors S. Radhakrishnan, Ashok Simha, and Punita Lal in 2024 and 25. Governance framework. Cipla employs a multi-threaded governance structure designed to ensure accountability with 6 brand committees acting on statutory requirements. Compliance. The company adheres to SEBI regulations 2015 and provides regular audited financial result as seen in on May 13 and 2025. Key policies. Governance is supported by policies on related party transactions, nominations and remuneration, whistleblower risk management, and anti-bribery. Industry trend. Focus on respiratory and chronic diseases medicines. Growth of biosimilar and biologics. Expansion of generic drugs market. Digital healthcare and diagnostics. Microeconomic analysis of Cipla Limited. Geographical exposure. The Cipla's revenues is well deserved with 43% from India, 26% from North America, and significant growing presence in South Africa. This diversification acts as edge against volatility in any single market. Indian market strength. In the Indian pharmaceutical market, Cipla is ranked third capitalization on strong branded pre- prescription and the large trade generics portfolio. The One India strategy has fueled consistent double-digit growth in this segment. US market dynamics. The USA critical market is expiring price, yet Cipla focus on complex specialized produce, pro- products help maintain a 25.6% EBITDA margin in financial year 2026. Deposits some adverse pressures, currency and inflation. As a major exporter, 50% of revenue from outside India, Cipla is sensitive to fluctuations in the India rupee against the US dollar and ZAR. Regulatory and legal risk. The company is managing ongoing litigation regarding National Pharmaceutical Pricing Authority overchanging allegations with wrongly 2011 crore under dispute. Input cost stability. The sector is witnessing and cooling off in raw material and freight cost, allowing for better margin management. Suggestion for investors. Cipla can be considered a moderately safe and growth oriented investment, especially for investors looking for exposure to the healthcare and pharmaceutical sector. Thank you.